monochrome Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider monochrome.
Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us here at Ausbiz. Let's check what happened overnight on global markets. A moderate rise in US consumer prices, not enough to stem that positive investor sentiment, with stocks rising and bond yields retreating further. On Wall Street, the major indices finished in the green, aside from the small cap Russell 2000. The NASDAQ's gains were limited by Alphabet shares. The volatility index, having hit a 4-year peak last week, amid heightened fears of a US recession, has now returned to its long-term median. Now, stocks, specifically Alphabet shares, fell on a report that the US Department of Justice is considering options that include breaking up its Google online search engine, and Tesla shares slumped. Elsewhere among the financials, Charles Schwab rose after positive July performance numbers, and Allstate climbed after agreeing to sell a business unit. Kellanova shares surged after the family-owned confectionery maker Mars said it would buy the snack maker for nearly $36 billion. And Cardinal Health gained after the drug distributor raised its 2025 profit forecast. Well, US consumer prices rose at a modest pace of 0.2% in July, taking the annual increase in inflation to below 3% for the first time in nearly 3.5 years. A 0.4% increase in shelter costs accounted for most of that rise in the CPI. Meanwhile, Chicago Fed President Austin Goolsbee has said interest rates are very restrictive, and he said, "It feels like, on the margin, I'm getting more concerned about the employment side of the mandate." Well, US Treasury yields slipped following the consumer inflation data. The yield on the 10-year note falling to 3.82% and the 2-year at 3.95%. Meanwhile, in the UK, inflation fell 0.2% for the month of July to be up 2.2% for the year, with core inflation running at an annual rate of 3.3%. And Eurozone second quarter economic growth rose 0.3%, taking the annual growth rate there to 0.6%. The US dollar has softened against its major peers, helping the euro to a near 8-month peak, while the British pound fell, and the Aussie also falling to 66 US cents. Well, earlier I caught up with Tony Wang, who is the portfolio manager of the Science and Technology Equity Strategy Unit at Rowe Price out of Washington, DC. And our discussion focused on AI and the return on investment among big tech companies.
I think that's a totally fair question that the market is currently struggling with. And just given the amount of spending and the capital spending that the hyperscale players are doing, I think that's like a natural question. I think that there are like really interesting use cases, but it takes time. I think that one of the big use cases that we're seeing right now that is working, though, is digital advertising, as well as right now Tesla is training full self-driving with GPUs. So I think those are like kind of the lead cases here. I think there is a fair amount of experimentation that is fueling kind of this growth in compute spend. But I think another aspect on top of that is just like, is this kind of race for super intelligence among the big tech firms just too important to take the foot off the pedal? So I think that's actually kind of what is more important for the go forward. I think that just given the amount of CapEx spend, like I could tell you 1,000 examples probably of enterprise use cases, but I don't think that they would stack up to the $200 billion that's being spent on AI infrastructure. So I think in the meantime, the market's probably just struggling with how willing are the hyperscale players like Microsoft, Google, Oracle, Meta willing to spend to kind of have that first place seat in the AI race?
Well, given it is a race as such, then, Tony, do you see that there are winners and losers, certainly longer term?
Yeah, well, I think that they're all building large language models that kind of do the same thing. And, in terms of requiring a lot of compute, being broadly applicable, I think that we are kind of in this AI space race. And I think it's too early to call winners and losers. But, we are in a position where the gains could be like astronomical, and there's too important to lose. I think Google, on one hand, is really focused on AI because search could be transformed here. And so I think it's imperative that they continue to invest. I think Microsoft has, ability to roll out AI across their Microsoft Office suite, via Copilot. If that works, there's huge ARPU improvements there. And in terms of Meta, I mean, they are seeing the improvements there with digital advertising. And so, I think that it's likely that they'll continue to spend in very large kind of amounts. But I think the question is like, are the expectations low enough so that the stocks can keep working relative to what's going on?
How are you viewing Apple at the moment? Obviously, as it seeks to integrate AI, particularly into its devices.
Yeah, I think Apple's in a very unique position where they've chosen to kind of be the ecosystem holder, and as a result, they can kind of go at it with a relatively low capex way, like they did probably in search. So they didn't have to invent the best search, but they can integrate it with their phones, and then they're able to take kind of their kind of traffic acquisition costs, their TAC payment from Google. And so I think with AI and generative AI, they've chosen to integrate the best ChatGPT right now for their users. And so I think they're in an interesting place where they can have a low capex way to integrate generative AI into their phones. And as a result, like they can kind of cause a large upgrade cycle. Their phones are already really their install base is really aging right now, and so there's an opportunity to upgrade since you need to have the iPhone 15 Pro or above to access the features. And so I think it gives a good opportunity that for consumers to see something new, for developers to have a new opportunity to unlock new features in the iPhone. And Apple's kind of in a good position where they don't have to spend 50-60 billion dollars of capex every year in order to have that technology.
Tony, you mentioned Alphabet's Google there. A couple of issues at play, I guess. Most immediately is the regulatory threat, given the Department of Justice is looking at potential breakup there. What should we make of that?
Yeah, well, it's interesting. I think there's a lot of different permutations that can result in that. I think in the near term, if Google doesn't have to pay Apple for the traffic acquisition costs as much for it, there could be a little bit of savings, and so there could be like opportunities for earnings improvement in the near term. Unfortunately, I think that comes at the detriment of the long-term terminal value at a time when search is already kind of under pressure, perhaps from these generative models like ChatGPT or Perplexity, for example. And so I think that they're happy with the current agreement. Otherwise, they wouldn't be paying Apple this much money. And so I think any type of uncertainty around the terminal value for Google on search, if they lose a few points to Bing because of this case, I think that could be viewed negatively by the market more than perhaps the savings on paying, Apple for that traffic. The practicality of it is that this kind of happened in Europe, and most users did choose to stick with Google because it is a superior search product.
Tony, overall, can I ask what your preferred play there is at Rowe Price in terms of AI? Which companies you're focused on?
Yeah, so I mean, I think that there's several of the large cap companies look to benefit. I like Meta here. They've been able to kind of grow off of tough comps, and largely because I think they've shifted from CPU to GPU, and they've got kind of really nice advertising platforms and ecosystems to provide a lot of value. And I think we're seeing kind of TikTok share gain kind of even out here. And so I think they're a good beneficiary of digital advertising, and it's kind of like they can be front-footed and gain share here. Obviously, we own a lot of NVIDIA as well, and have been, we really like that company for the last 7 years. And so they continue to be the tip of the spear on AI acceleration and GPUs and the leaders of the kind of AI platform ecosystem. And then, we also own a good amount of Microsoft. They kind of have the leading position within Azure and being a thought leader with their connection to ChatGPT, OpenAI integration. And so, I think those are something those I would highlight. I mean, there's other kind of smaller cap companies like, I do like AppLovin, for example, and Zeta Global, where, I think you're seeing that generative AI, meets like proprietary data sets really produce good returns and improving returns for advertisers. So I think there's we own several AI beneficiaries, but I'd highlight a few of those as examples.
Tony, Wang from Rowe Price. All right, let's take a look at where we're likely to go. We're going to open in just a couple of minutes' time. SPY futures are up close to 0.4%. Of course, the focus very much going to be on earnings results that we've seen today. Plus, we'll keep an eye on the jobs numbers. They're out at 11:30 Eastern as well. We get you right across that. So stick with us. The open is just around the corner.